Welcome to this session of Tech Investment Summit, everybody. For a brief introduction, the last year has been eventful for businesses which have been supporting digital transformation. Companies which offer products and services for the digital transformation journey have seen solid and sustained growth with global demand. The growth is likely to continue, and add to that the momentum of investment in software as a service or SaaS, with a handful of Indian or India-born companies in the sector poised to also make their debut in the US market. So to discuss how the country's mid-large scale IT firms and Indian SaaS companies can capture this demand to become frontrunners, we have our eminent panel of speakers, and we'll cut to the chase with this. My first question is for all the companies, the representatives, the CEOs. What are the key challenges in building a global software brand out of India? Also, when we talk about the IT services and IT sector, what are the challenges to scale these products globally?
Sure. I think the advent of cloud makes it very possible for anybody sitting anywhere to build a global company and a global business. To that extent, I think it's been a great enabler for the Indian companies. The only thing is that you need to test out your solution at scale, and if it gets tested in India, it becomes a validation, and that can be rolled out across the world. The expectation globally is of quality is much more, and the fewer number of clicks and the ease of use and so on, so for the self-installing application and software. But pretty much I think there is no reason why Indian startups or Indian SaaS companies should not aim global, and actually they are taking the world's largest companies straight ahead right now. And some of them are Silicon Valley based, some of them are India based, and some of them have engineering teams in India, but the CEOs and the team sitting in US. So I will call them all under the single umbrella of Indian-led entities.
Srikar, in your journey, how easy or difficult has it been to scale the product?
Yeah, it's been a long journey for the Indian IT services industry itself. I think started somewhere in the mid-80s when I started. And obviously, you had to build the value prop up from a purely cost arbitrage to quality process to now actually doing digital transformation. But I think overall the industry, I think, has gone through the change and continue to adapt themselves and continue to be at the leading edge of being able to offer these value propositions to companies and customers globally. Obviously, it's not an easy journey. It's been a long, arduous journey of, actually to fight the whole India brand, because when you start offering technology, and what the legacy you had with the quality which came from India, you had to beat that, and before you actually built a brand of you can actually depend on us to deliver world-class services, and now obviously that's happened.
Nilesh, would you like to weigh in on how similar or different your journey is from, say, Srikar and Virender's, and what are the learnings you have taken from them?
I think coming from IT services did not help in building a product business, so that much I can tell you, because it requires a little bit different mindset, and I think that was unlearning / new learning which happened for us and the founding team. But I think fundamentally, you asked about the global challenge. I think over last 10 years or so, the ingredients of what is required to build good SaaS businesses are sort of coming in place. Fundamentally, you need product development talent. So I think because a lot of companies have built so much technology over the last 10, 15, 20 years or more for global businesses and other software product companies, so that talent is sort of in place. Defining products is something which is a new type of talent, which also got created over the last 5-10 years or more. So that is again a good ingredient. Third is marketing and sales talent needed to distribute these products across the world. And obviously, as being SaaS, you can sell anywhere on phone. So that distribution ability is also getting built. So because in IT services, usually you had few salespeople and many delivery people. It's very, very skewed on delivery side. But in SaaS, it is more marketing, sales, and product talent. And I think that is coming in place. And finally, I'm honestly, I'm not so familiar with the IT services investment landscape, not the business per se. But capital which is needed to scale this business is also now coming in place. So I think all the ingredients are in place, and if the entrepreneur figures out the product market fit, then all the other ingredients will be available for them to build a global business.
How has your investment thesis changed, if at all?
It's a great question. I think that has been a very fundamental feature of our investing over the last 20 odd years that Chryscapital has been investing, and certainly over the last 10 odd years I've been associated with the fund. Technology landscape changes very quickly. There are new technologies coming in every 5-10 years, and that definitely requires us to keep tweaking our investment thesis. The formula that worked 10 years back is certainly not going to work now, and therefore we have found ourselves reinventing our investment thesis every few years. And the challenge as an investor is to not just tweak the thesis, but to make sure that we're ahead of the curve and we're placing bets in areas that will become new emerging growth areas in the years to come. Because if you get that cycle wrong, then there's a lot of damage that can happen to the investments. So that is a very integral part of investing in technology services.
So, which are some of these areas which you see currently that that will define the future of the growth of the sector?
There are lots of areas, I'd say. If I look at sort of top down, clearly this whole area of digital transformation is where all the attention and all the dollars are being put in currently. A lot of corporate attention is being put in these areas. Now, this is a little bit of a macro trend. You have to, as an investor, peel the onion and go 3, 4, 5 layers underneath to see what specifically are the areas that are even faster growing. Are there certain verticals where these trends are a lot more mature than others? So clearly, digital transformation is one. And that encompasses all the new technologies around cloud transformation, design elements, user experience, platform engineering. All of this I would club under the ambit of digital transformation. As you talked about, SaaS is clearly definitely an emerging area as well, and that ends up leveraging some of these technologies, and that's also somewhere within the ambit of the broader digital transformation bucket. The third area that is worth pointing out is sort of the whole engineering bucket, which goes as much on the software side as it does on the hardware side.
So, are you primarily focused on SaaS companies to see the next cycle of growth in the IT and services sector?
We're growth stage private equity investors. So we're looking for risk at the growth stage, which means companies and sectors that have validated unit economics, have scalable models, have demonstrated margin improvement and operating leverage. So in many ways, Indian SaaS is an overnight success on the back of 30 years of work that IT services has done. There's 30 years of work, 3 million developers, $190 billion of revenue, and a lot of value created by firms like Chryscapital and others in the traditional IT services companies. My first job was in Wipro Technologies. So I think India SaaS is really in a way standing on the shoulders of this giant. But I feel the real opportunity for all of us is, can SaaS generate $190 billion in revenue in half the time and not take 30 years? And I think very strongly that that's possible. One, SaaS is more scalable. Second, it democratizes software. So unlike the traditional on-premise software world, which only large companies could afford, you now see smaller companies and larger TAMs being addressed through SaaS. And we have the talent to build it. So our investment thesis, in short, remains exactly the same. There are 50 companies roughly in India in SaaS with ARRs of more than $10 million. We think this will be 500 in a decade. So this is a very rich nursery of interesting investment opportunities for investors like us.
How are you keeping pace with this rate of growth? And also, is M&A a good way of growing or a good way of reaching that scale?
I think we've looked at M&A as a very relevant way to grow. We bought about 6 or 7 companies in the last 6-7 years, and we continue to look at it. It's obviously to get new talent, access to new markets, new capabilities. We also went and bought a lot of IP because right now we use IP as a differentiator in our services business. But there's the potential to actually bundle it and see whether we can be run as a purely IP business. But we went and bought actually product companies. We recently went and bought a customer experience platform company. So we do see right now we are using IP as a differentiator in our services business, and that's helping us differentiate ourselves. If you see our margins and so on and so forth, they're way above our peers kind of stuff. Obviously, to manage growth, I guess you need to, it's all about talent, I think, is what I see currently. I think how do you get and scale the right talent? Talent shortage, I think, will get more and more severe as we go forward of the right kind.
For us, the equation is different. So for us, the main thing is to take it global. 80% of the revenue comes outside India. And increasingly, outside India is growing a lot more faster for us. And we are B2B software business, and mostly with very large companies. You can say Fortune 500 or Fortune 100, you can say. Acquisition is something we are not considering because we find technology incompatibility a major challenge, and we rather build it quickly rather than try and integrate somebody else's technology. If at all acquisition takes place, it will be for acquiring a certain customer base or certain areas in which we don't have a solution to the whole equation.
What percentage would you think, or what kind of budgets have you set aside to capture the current demand?
I can only say we're going to double our investments. I'm a public company.
Echoing on to what Srikar is saying, we have opened up legal entities in about 22, 23 countries, and we have office in every city globally that matters. And being in the same time zone, having support, giving support to the customer in the same language by same national people is going to be extremely important, especially for selling high-ticket items and not $5 per month kind of subscription or something. So my feeling is a lot of discovery in the sale process takes place online. So the demo, the validation, etc. takes place online. So we have invested in fewer salespeople. We do a lot of spend on marketing, digital marketing. So I would think for a product company, marketing should be the single biggest expense.
Okay. And has that gone up? Has your spend gone up in this over the last year and a half?
Spend actually has come down because we have learned to weed out channels which are not so effective. Earlier we were using a lot of Google AdWords, which is somewhat wasteful channel. So we have learned to much more finely target, and the tools given by the likes of LinkedIn and many other providers allow you to micro-target, micro-segment, and so on. So maybe we have reduced the budget to half, but doubled the output. So 4 times increase in productivity of our marketing spend.
Okay. That's quite interesting. And Nilesh, how are you going about your growth phase currently? Where is your advertising money or marketing money or growth expansion money going? Which channel?
I think for a SaaS company, up to 50% spend of revenue is very, very doable, depending on what the model is. Obviously, some companies which are more product-led have a lower spend, so our spends are going to go up and are already gone up.
How do you look at your growth stage companies capturing this entire global demand? And what is your advice to most of your portfolio companies when it comes to spending on growth versus internal product innovation?
Yeah, I'd say that our investment thesis has a slight bias towards and speaking of SaaS, towards companies that are born in India, built in India, find product market fit in India, and then go global. And we think this gives them a competitive advantage, a competitive moat, makes their business model more robust. You're able to see higher capital efficiency and so on. So if there are entrepreneurs in the audience who are debating, should I build a product in India and sell in the US first or sell in India first? Our view is sell in India first because you know the customers here, you know the terrain. So invest in your customers and in the market right here in your backyard first before you start scaling globally. That would be one advice. And second, on sales, and I've now learned this from Nilesh, in the last few months. I mean, you can't go wrong with investing in sales. Sales is a very high ROI, business unit within your organization. And if you're a growth company, you can't go wrong by hiring, training, and arming high quality salespeople with tools like LeadSquared so that they're more effective in what they do. So absolutely invest in sales is the lifeblood of your organization.
You've been traditionally focused on the Indian market, so to speak, right? So has that changed in any way?
While actually things already changed several years back. We might be an India-based private equity fund, but if you look at our investment portfolio last several years, it betrays a much more global bias than an India bias. In fact, most of our recent investments have been in companies that are sometimes domiciled in the US, often enough headquartered in the US. So we made that move quite a while back. Frankly, the IT services industry always had a certain flavor where the customers typically were based out of the US and Europe. At least that's what constituted the vast majority of the industry, and the supply was based out of India. I think that continues to be the case.